Hello guys. So I think we can start. We have five guys already. I think we can start with the five. If you can hear me, please unmute your mic and confirm that you can hear me.
Yeah, for sure, I can.
Okay, so let's get started. So I'm going to make it as quick as possible, and then as I do the presentation, I would like you guys to type your questions on the chat section so that I can get an idea of what you guys would love to learn. So I want to take it from a beginner's perspective, and by beginner I mean I'm going to start by defining what a share is, what a dividend is, what a fractional share is, all that before I get to the more complex stuff. Okay, so let's start by defining a share. And basically, a share is a unit of ownership in a company. So when you buy shares in a company, you're sort of becoming an owner of a part of the company. And companies typically begin to issue shares through a process called an initial public offering. You'll hear guys saying an IPO. So this marks the first time when a privately held company, let's say like Safaricom, before 2008, becomes a publicly traded one. So when a company goes public, it offers it to sell its shares to investors on a stock exchange like the New York Stock Exchange, which is the biggest in the US, or the Nasdaq, or for our case, the Kenyan perspective, the Nairobi Securities Exchange. Okay, so I think by now everyone knows what a share is. So how do you profit from shares? Like, why should you invest in shares? There are two ways you profit from shares. The first one is called capital gains, and basically, putting it simply, capital gains is when you buy, let's say you buy a stock at 20 US dollars, and then the stock, or rather the company, performs well and the stock goes to 40 US dollars. So the moment you sell the stock at 40 US dollars, you will have made a 100% profit. That's what we call capital gains. On the other hand, the second way you make money in the stock market is what we call dividends. And dividends are basically a small part of a company's revenue that the company shares with shareholders. So you find that a company will say that out of, let's say a company is going at 20 US dollars, the company might decide, let's give a dividend of $1 per share. So for every share you own, you'll be getting a dividend of $1. So those are the two main ways in which you earn from shares. First one, capital gains. Second one is dividends. Okay. So I think one thing that's really important for you guys to note is over the long term, the average annual stock market return is 10%. So like basically an average of all the years. Of course, there have been years when the stock market performed well. There have been years when the stock market performed badly, like last year. But over the long term, the average annual stock market has returned 10%. That's why it's always advisable to invest for the long term. Okay. I think when it comes to risk, you guys might already know the risk. Basically, just as you can expect returns, that company that you expect to go to $40 from $20 can also go to $10. Okay, so it depends with how the company performs. So that's the risk that we have, where a company might actually lose its share value after you buy the company. Okay, so up to there, I think we are good. That's like the complete intro. Brian is saying that he can't hear me. Can you guys hear me?
Yes, I can. I think they need to probably connect their audios.
Oh, Brian, because everyone else can hear me, right? Ray, can you hear me? Amo, can you hear me? Okay, perfect. So I think that's okay for now. It's going to get a little bit complex now, so I want you guys to pay attention. In as much as you can buy one share, and there are companies that are quite expensive. Let's say like a company like, let's say, let me give you a rough example. A company is going at $200 per share. So you might not be able to buy $200 to be able to buy a full share. So what we do, we offer what we call fractional shares. And without making it complex, fractional shares are basically buying portions of shares. So what do I mean by this? So if a company, let's say a company stock is, a full stock is $100, yeah, we allow you to buy a minimum of $5. So I want you guys to note that you can buy any US stock as far as you spend a minimum of $5. So don't be discouraged when you see a stock is going for 200 USD per share. You can buy what we call fractional shares. And so when you buy, let's say $5 and the stock is going at, let's say, 200 US dollars, then what you'll not get one full share. You'll get like a 0.00 something of a share. Just like the guys who have been investing in Bitcoin. I think most of you guys might have heard of Bitcoin. So let's say if one Bitcoin is going at 23,000 USD, you can buy a 0.0005 portion of a Bitcoin at maybe 1,000 Kenyan shillings or $10, right? So that's what we mean by fractional shares. So on the Hisa app, you guys can buy US shares worth as low as 5 USD. So how do fractional shares work? So when you buy a fraction of a share, you're treated the same as any investor with a full share. So you make the percentage gains and get the same benefits of stock ownership. If you purchase fractional shares of a stock, you'll also get dividends. So you'll receive a payment based on how many shares you own, just as any other investor would. So let me give you an example. If shareholders receive a $1 dividend for each share and you own, let's say, half a share, you'll receive a 0.50 USD dividend. I think that's simple maths. So far, so good. That's what we call fractional shares. So I want you guys, after this meeting, go to your Hisa app, click invest, then click on all US stocks, and then click on any US stock. The one at the top most likely will be, let's say, Tesla. Click on Tesla. You'll see Tesla is around 160, 170. I can't remember, 160, 170 there. And then try to buy. When you try to buy, you'll see that you'll have an option to buy as low as 5 USD. Brian, you might need to stop your video. So that's all about fractional shares. Let's talk about ETFs. Okay, so we have talked about shares. What is an ETF? I actually don't want to use the description on the document because I'll send it to you guys. I just want to explain it simply. You see the way you can buy one share of, let's say, shares of a single company. Let's say you're buying Tesla. What if I told you it's possible to buy shares of 5 companies all at once, or 500 companies all at once? That's what we mean when you talk about ETFs. So an ETF, simply put, is basically a basket of assets, maybe stocks, bonds, commodities, currencies, etc., etc. So what I mean by buying more than one share, let's say the first scenario we looked at was buying, let's say, Tesla alone, the shares of Tesla, right? So when you talk about ETFs, you're buying, let's say, Tesla, Apple, Microsoft, Amazon, and let's say 450 other stocks in one trade. And that's what we call an ETF. And one thing I would like to mention is that as a beginner, you're more better off investing in ETFs than single stocks because you don't have the skills to select individual stocks. But when it comes to ETFs, you can actually invest in ETFs that have, let's say, like 500 companies. So you see, when you invest in 500 companies, you sort of get the advantage of diversification without much pressure. That's why I'm saying as a beginner, you're better off investing in ETFs. So let me read the description. So an ETF is a basket of assets, including stocks, bonds, etc., where investors can buy a share of that basket, just like buying shares of a company. Okay. What are the types of ETFs? I want us to look at the types of ETFs. The major types of ETFs are index ETFs, and you guys will get to understand what an index is as we continue with the Zoom. So an index ETF tracks certain stock market indexes, such as the S&P 500 or the NASDAQ. Then we have bond ETFs, which offer exposure to a wide selection of fixed income instruments. Those are bonds. Then I want you guys to pay attention to these ones. Sector and industry ETFs. They allow you to invest in a particular industry, such as the technology industry, the healthcare industry, or the financial industry. Then we have the commodity ETFs. They track the price of a commodity, such as gold, oil, etc. Then we have style ETFs. They are devoted to an investment style or a market capitalization focus, such as maybe you might find an ETF that invests in large cap value stocks, small cap growth stocks, etc. Then we have alternative ETFs, foreign market ETFs, and actively managed ETFs. I don't want you to focus a lot on those ones. They are a bit complex. Just focus on the common ones. The index ETFs are the sector ETFs. and the commodity ETFs, and also the style ETFs. So as I had mentioned, why should you invest in ETFs? What happens is if you're looking to invest in stocks, but don't have the time and research capabilities to choose the appropriate stocks for your portfolio, ETFs come in handy as a great option. This is called passive investing. So what ETFs will do is that ETFs help you to participate in the stock market with much more ease than investing in individual stocks, just as I had mentioned. So the first advantage will be diversification. Okay, so ETFs will give you an efficient way to diversify your portfolio without having to select individual stocks or bonds. So when you buy an ETF, you're buying hundreds or even thousands of different securities in one trade. The second advantage is cost efficiency. So if you are to invest, let's say, in the 500 stocks in an ETF, you'd have to pay commissions for every trade you take. And let me just mention this right now. On the Hisa app, we charge a 1% commission per trade for US stocks, both US stocks and Kenyan stocks. So the commission is 1% per trade. Another thing I should mention, when it comes to dividends, there's a 30% withholding tax on dividends for all non-US residents. So basically all of us, yeah? So that's according to the regulations in the US. So the charges are 1% per trade. That's all you have to pay. There's no maintenance fee. There's no like other hidden fees, just a 1% fee per trade. And then for the dividends, you get a 30% withholding tax just because you're not a US resident. I mean, pardon me for that. So ETFs will be cost efficient because if you had to go and buy all 500 stocks that make up, let's say, the S&P 500, you'd pay your commission, your broker a commission every time. So ETF allow you to buy all 500 shares in one go and pay only one brokerage fee for that specific trade. Okay. The third advantage I want you guys to focus on is asset allocation. So let's say you're a young investor. Of course, when you're a young investor, you're more likely to take up more risk. So you can allocate your portfolio to have more equity ETFs. These are ETFs that hold stocks, as compared to an older investor, let's say an investor in his 60s, who is more risk averse and is looking for maybe capital preservation. He might want to go for bond ETFs. That's what I mean by asset allocation. Finally, this is the one I want you to focus on a lot. We have what we call sector rotation. Let me see. Brian is asking how much is needed to start investing in ETFs. Basically the same thing. On the Hisa app, 5 USD minimum. Jamal has a question. How do you know companies that do well in shares in the long run? Is there a history for them? Where's the best time to buy and sell shares? Okay, so what we do on our WhatsApp group, on our social media groups, we send performance history for all companies. Let's say the S&P 500 companies, the Kenyan companies, so you guys can be able to follow up on the companies that are performing well this year. So like for this year, the top gaining company in the S&P is called NVIDIA, which has gained around 57%. So these are some of the things we send on our social media group so that you can be able to follow and understand the companies that do well in the long run. Okay, so I was talking about sector rotation as an advantage of investing in ETFs. What I mean by sector rotation is, let's say we're in a good market condition, there's no inflation, etc. The markets are good. You will go for, let's say, the more volatile ETFs. Let's say you will invest in biotechnology sector, which is quite volatile, and invest in the biotechnology sector via the iShares Nasdaq Biotechnology ETF. But when the conditions change, let's say now, like the situation we're having right now, there's a lot of inflation, the markets are unpredictable, you might want to go for a more defensive investment style. And by defensive, I mean going for those sectors that are considered defensive, like the consumer staples. So you might rotate and sell your ETF, your iShares Nasdaq Biotechnology ETF, which is considered more volatile, and go for more defensive sector like the consumer staples select sector fund. Okay, so that's what I mean by sector rotation. Another thing I want you to note is that you can take advantage of developing investment themes, such as, I know by now everyone is talking about ChatGPT, everyone is talking about artificial intelligence. So you might be like, okay, yes, everyone is talking about ChatGPT. Microsoft has invested $10 billion in ChatGPT. Google has launched BARD. Everyone's talking about AI here. I mean artificial intelligence, but I don't know about any artificial intelligence stocks. So what you can do, without having the hassle of selecting individual artificial intelligence stocks, you can just go for an ETF that has artificial intelligence stocks. Like one thing, let me mention that every year we usually have a theme in the stock market. So like last year, the theme was energy stocks. Energy stocks were performing well. Actually, energy stocks gained over the energy sector gained over 50% in 2022. So every year we have a theme. The theme for 2020 was, who can tell me, who can guess what was the theme for 2020? Okay, the theme for 2020 was working from home. So we saw companies like Amazon, companies that deliver goods, doing well. We saw companies like Zoom, because of the working from home, doing well. The theme for 2022 was energy sector, because there was the whole energy crisis. So energy companies were doing well. So for me, what I'm seeing right now, I think the theme for this year will be artificial intelligence. Everyone is talking about AI. So how can you take advantage of this? You might want to look at AI ETFs. And let me give you the biggest AI ETF is called the Global X Robotics and Artificial Intelligence ETF. Its ticker symbol is BOTZ. So this is the symbol. So a ticker symbol is basically a symbol that is used to represent a certain stock or a certain asset. Let's say for Safaricom, it will be SFCM. Is it SFCM? I'm not sure. Let me see. Let me say KCB. That's the ticker symbol. So I want you guys to just do a Google search the Global X Robotics and Artificial Intelligence ETF on your Google search. So just type Global X Robotics and Artificial Intelligence ETF stock price. And then what you get, click on the YTD to see the returns that the ETF has given in 2023 alone. SCOM. Sorry, I forgot that. Anyway. So I think that's okay for now. So let's now look at a list of the top 10 global ETFs ranked by assets under management. So the largest ETF is called, its ticker symbol is SPY. So that's the SPDR, S&P 500 ETF Trust. So I'll send the document, so don't worry. So we have the SPDR S&P 500 ETF Trust. We have the iShares Core S&P 500 ETF. We have the Vanguard S&P 500 ETF. We have the Vanguard Total Stock Market ETF. We have the Invesco QQQ Trust. We have the Vanguard Value ETF, etc. So I'll send the document there, and then you can search for these ETFs. So for beginner, you might want to start with the three ETFs, the SPY, the IVV, and the BOO, because they track the whole stock market, the general stock market, the 500 largest companies in the US. So with that, it gives you a less risky investment, because you're sort of investing in the 500 companies in the US. So for a beginner, I would advocate for starting with an ETF like the Vanguard S&P 500 ETF before you gain more confidence and more experience and start going for more, let's say, advanced ETFs such as the sector ETFs. Now going to specific sectors. Let's say you want to invest in the energy sector. So you look for energy ETFs. And we have more to talk about ETFs. So I think I'll dedicate a whole webinar on that, because you can also make money when the stock market is falling. So we have what we call inverse ETFs. So inverse ETFs, what they do is they try to replicate the returns of the market in the opposite way. So basically, if let's say the S&P 500 is falling, the inverse ETF will be gaining. Let me type that on the chat section. So I want to give you guys some assignment. So search for inverse. Also search for what you call leverage ETFs. So search for those ones. And then there's something I'd like to mention. So where can you guys get data concerning ETFs? Okay, so let me give you a tip. There's a site called etfdb.com, or basically ETF database. Just search that one. You'll be able to see all the ETFs, and we'll be able to use what we call screeners. So screeners are basically, you put the qualities of ETFs that you want. So you might want to screen. Let's say you only want to invest in biotechnology ETFs. So on your screener, you will put a filter and type biotechnology ETFs, and then the screener will give you only biotechnology ETFs, and then you can see the performance of the ETFs. Okay. For stocks, let me mention a good site you might want to look at is called FinViz. So FinViz is a good filter. Is a good stock screener. You can use FinViz. You can also use Coifin. Those are good stock screeners for US stocks. So you can be able to see the performance of stocks. I remember Jamal had asked about that. You can be able to see the performance of stocks year to date. You can be able to screen stocks based on different values or different qualities. You can be able to see value stocks, growth stocks. You can also be able to filter stocks based on indexes, let's say S&P 500 stocks, etc. So check out this site. So I want you guys to, for ETFs, check out etfdb.com. For stocks, check out FinViz and Coifin. Okay. What else? So the common ones for information or for news regarding stocks, search Reuters. This for news regarding stocks. You can also search Yahoo Finance. You can also search for YouTube. You can search Bloomberg on YouTube. Just search Bloomberg Finance on YouTube. Also, they have a website. Those are good ones to get you started. So I think that's it for the information. And then for the guys who love technical analysis, that's it. That is looking at charts. Just search TradingView. So I have 10 minutes left. So let me define the S&P 500 index. The S&P 500 index is also known as the Standard & Poor's 500 index. It's a stock market index that is viewed as a measure of how well the stock market is performing overall. This is because it includes around 500 of the largest US companies. So the S&P 500 is usually considered as the benchmark index for the US stock market. So who can tell me what's the benchmark index for the Kenyan stock market? Anyone?
20 companies.
Yeah, Abel said NSE 20. Someone else? Okay, we have NSE. Yeah, we have the NASI, we have the NASI, and we have the NSE 25. So that's it for the S&P 500. So can you invest or can you buy shares in the S&P 500 stock? Yes, you can. So I've talked about them. ETFs that track the S&P 500 index. And I think you guys can remember these ETFs. So the SPDR, S&P 500 ETF, iShares Core, S&P 500 ETF, etc. So I want you guys to go to the Hisa app and click on US ETFs and try searching these ETFs, the SPY, the IVV, the VOO, and see what you can see. Just learn more about these ETFs. Okay, we have three major indexes. The second one is called the Dow Jones. The Dow Jones Industrial Average, also known as the Dow 30, is a stock market index that tracks the 30 large publicly owned blue chip companies trading on the New York Stock Exchange and the NASDAQ. So this is another index that we look at. After the S&P 500, we also look at the Dow Jones. And when you hear guys talking about the performance of the US stock market, most of the time you hear them looking at the performance of the S&P 500, the performance of the Dow Jones, and the performance of the NASDAQ 100. I think I didn't add the NASDAQ 100. So basically, the NASDAQ 100 is an index that mostly has technology companies. And that's why it had quite a rough year last year. So the NASDAQ has 100 technology. It's a mostly technology aligned or sort of bent index. That's the NASDAQ 100. Let's talk about these two major exchanges that we have. I talked about the New York Stock Exchange, which is the world's largest stock exchange, located on Wall Street, New York City. So that's why when you hear guys talking about the stock market, they'll talk about Wall Street. They'll say Wall Street analysts have said this, Wall Street is reacting to this just because the largest stock exchange is located on Wall Street. The second largest stock exchange is called the NASDAQ. And the NASDAQ started providing automated information about stock prices that investors could use in 1971. But what happened is that eventually it became the world's first electronic stock market. So taking over trading for many stocks that had previously traded in places other than formal stock exchange. Then let's talk about when the two markets open. So the two major stock exchanges in the US stock market, that's the NYSE and the NASDAQ, usually open at the same hour. That's 5:30 p.m. Kenyan time to 12 a.m. Kenyan time. But this is changing right now because we have what we call the daylight saving. So during daylight saving time, which starts on the second Sunday of March and ends on the first Sunday of November, the times are shifted 1 hour back. So regular trading will start at 4:30 p.m. Remember, I said we started 5:30 p.m. So regular trading starts at 4:30 p.m. and closes at 11 p.m. So right now, trading is not starting at 5:30. Trading starts at 4:30 and closes at 5:30 p.m. Finally, these are some of the holidays. You guys will read about the holidays. So the stock market is not opened on these holidays, the New Year's Day, Martin Luther King, etc. I'll send the document. And finally, how many sectors do we have in the US stock market? The US stock market, we have 11 sectors. Who can guess how many sectors we have in the Kenyan stock market? The sectors and the number of stocks or companies listed. So we have 13 sectors in the Kenyan stock market. Let me type that. 13 sectors and 63 listed companies. That's it. So for the US stock market, we have 11 sectors. So we have the energy sector, utility sector. Let me define, the energy is self-explanatory. Utilities is basically the common things that you use on a day-to-day basis, water, electricity, etc. Consumer defensive. So consumer defensive are basically considered the goods that guys will use despite the condition of the economy. These are things that you need to use despite how the economy is performing. The difference between consumer defensive and consumer cyclical. Consumer cyclical, these are sort of luxury goods. These are goods that you use because you have the money to use them. Let's say basically fashion brands, all those things. So that's the difference between consumer defensive and consumer cyclical. That's why you're told when there's inflation or the market is uncertain, go for consumer defensive, because these are things that guys will need to use despite how the economy is performing, because most guys will reduce on their consumer cyclical. Okay. We have the healthcare, that's self-explanatory, industrials, we have financials, that's the banks, we have basic materials, we have real estate, we have information technology, and finally, communication services. I think that's it for today. I don't want to give you a lot of information overload. So guys, do your homework. Look at the ETFs I've told you. Look at the sites I've told you. That's FinViz, CoinFin, ETFDB, Bloomberg, Reuters, etc., all those sites. And also search for the ETFs I've told you, the global robotics ETFs, etc., and also the various types of ETFs. And for the guys who want to learn more and advance more, you can search for ETFs that can help you make money when the market is, even when the market is going down. So you can search for inverse ETFs, and also for the guys who want like triple or double returns, you can search for what you call leverage ETFs. They're quite risky, but you might want to know about them. So let me get some questions. So type your questions.
Yep.
Yeah.
Please, before you go, yeah, there's a question I'd asked you before.
Okay.
It's in the chat box.
Okay. Just remind me the question.
All right. Okay. So I'm not in your WhatsApp group. So I was just asking if you can maybe kindly share with me your social link so I can join. I only follow you guys on LinkedIn, literally.
Okay. So let me give you my number. on the chat section, just text me and
Alright.
then I'll add you on the group.
Got it. Okay.
So I think the meeting is ending in the next 1 minute. So just join the WhatsApp group and then ask all your questions on the WhatsApp group. Just text me if you're not on our WhatsApp group. Sasa.
Okay, got it. All right. Yeah.
So any feedback in like 20 seconds? Did you guys learn something? How was it? So perfect. So I hope you guys have learned a lot.
Me may miss out crazy.
Don't mind, I was recording it, so I'll send it to the group.
Nice. Wazi anto shukran man.
Sawa, haina shida.